Hope you're all having a good weekend. It is Sunday the 17th of January. Right. I've taken some screenshots of some charts this morning. Been up early. Pay attention to this video. This is going to be one of the most important videos I've made for quite a long time. I'm going to lay out a case now why I think that the dollar is about to have a really significant, well, certainly a correction to the upside. Might even be the start of quite an important bull run. But for now, let's just look at the potential for a decent recovery, correction to what has been a pretty big bear trend through most of last year. Looking at the 4-hour chart for the dollar index, you can see that this is a potential inverse head and shoulders. So there's the left shoulder, there's the head, there's the right shoulder, the bottom of the right shoulder here, and we're now moving above the neckline. We've closed the week above the neckline. So this is a bullish signal. The inverse head and shoulders has been completed. As you can see, we're now also trading above the 4-hour moving averages, the 100 and 200 period moving averages, which is something we certainly haven't done since the beginning of November. So it's over 2 months since we managed to get above there. So this looks pretty bullish. On the hourly chart, we've got the price now trading above the all the moving averages, and we've got bullish moving average crossovers. So the 100 moving average has crossed that 100 hour, has crossed over the 2 and the 5. The 200 moving hour is just starting to cross over the 5. So again, very short-term bullish signals. Probably should have started with this one, but this is the weekly chart for the US dollar. Clearly very oversold on the stochastic. We had that bullish candle 2 weeks ago, which I pointed out to you last week, and then that was followed by a nice big blue-bodied candle, which is what you would hope for to confirm this buy signal. Even the candle 3 weeks ago was relatively bullish. We had buyers coming in at the low of the week and pushing the market up towards the open. Right. Note how the price is also trading above the green 500 week moving average. So I could say on a monthly basis, we closed December below the 500 week moving average, and we continued lower in the beginning of January. But now it looks like those bears here will be caught in a trap. Shorts will be caught as we move back above 500 week moving average. Okay, let's look at some individual pairs. The New Zealand dollar versus the US dollar. We had that big trend line resistance. You've known all about that. I've been talking about that for a while, plus the 500 week moving average. We rejected that and we've come lower last week. Quite significant losses. Now we've hit some support which I think could hold. There are some very, very minor short-term support levels in some of these dollar pairs which might indicate that a little bit of a bounce, initial weakening of the US dollar at the start of the week, but I would use that opportunity to buy the dollar. So any bounce in the New Zealand dollar versus the US dollar, I would definitely be looking to sell because the longer term charts look negative to me. We do have a potential inverse head and shoulders on the 4-hour chart for the dollar versus the Swiss. The dollar has not managed to push higher against the Swiss through the neckline yet, so we need to watch that. But you can see that again, just like that dollar index chart, this one looks quite similar in that potential inverse head and shoulders, so I'm going to be watching that carefully. We are trading above the moving averages on the 4-hour chart. Right, the Aussie dollar has stalled just below the 100 and 500 month moving averages at around the 78.80, 79.10 area. So I think that's important. Looking at the Aussie dollar daily chart, there was no particular reason to sell it. We consolidated for the first, almost first 2 weeks of January, but you see on Friday we just closed below this 2.5 month trend line. So I think that is an important point. Having stalled at those major long-term moving averages, we've now broken 2.5 month trend line support. So that is also obviously a negative signal. And when we open on Sunday night tonight, even if we open unchanged, we're going to be obviously clearly below that rising trend line for another negative signal. Stochastics are looking quite negative too. The only thing that I would like to see is the 10-year T-note yields continuing to climb, and that's the only sort of fly in the ointment of my theory about a stronger dollar. This weekly candle on the US 10-year yield is quite negative. We pushed up higher, broke that trend line that I had shown you during the week on the daily chart. But we pulled right back. We gave up all the gains on the yield and even closed slightly lower below the previous week's close and the previous week's high. So that's obviously not particularly bullish. Maybe the yields will dip down to sort of the 1% area and hold and then push up. But it doesn't detract from the fact that those charts look pretty bullish for the US dollar. As I said, maybe we will get a little bit of a pullback in the dollar, and maybe we'll get a little bit of a pullback in these rates, and that will be a good opportunity for us to buy the dollar and see if these rates do push higher into the end of the week. I guess we should look at gold. It's one of the most popular markets. I know a lot of you guys like to trade it. I do enjoy it too, and I think the levels are usually pretty good. But it's become increasingly hard to trade because this is just a mess. Ultimately, this trend is sideways, I would say, at best. We can't really identify a clear trend. Certainly not since September. We really have just gone sideways. Even the moving averages are flattening out to confirm that. So it's been difficult. The longer we trade sideways, the more we just trade the same prices over and over again, and it's harder and harder to identify strong levels because, as I say, the prices are just traded over and over again. When you look at the weekly chart, there is a negative bias to this chart. Certainly, over the last 2 weeks, of course, we've had negative candles. Right, I'm sort of scratching around in the dark here for anything to say about gold for that reason. So, we are trading below the 200-day moving average, which is a negative. Clearly, despite all the talk of inflation and stimulus and everything else, gold is just not benefiting from that. So I do think that the risk is to the downside. And again, this would tie in with my theory of a stronger dollar too. But yeah, a little bit inconclusive. I'm going to finish up there and talk, and you'll see more updates in the chat room from tomorrow morning after I've done my reports and sent them off today.